Benjamin, how are you? Good to see you.
Sorry, just for you. St. Patrick
Hi,
in Brussels.
Ruth Kennedy, how are you? Pleased to meet you. I wore green.
Yes.
Ruth Kennedy.
Hi, she's green, but for another reason.
Yeah,
It's
but
St. Patrick in
Yeah,
Brussels.
exactly.
It's a nice color.
Benjamin even did
I have
these
no
in green
problems
for
with
us.
that.
Have you a preference where we sit? Have you an order?
No particularly, so feel free.
We all have our own Madonna mics.
Everyone is alike. We just sit here, so it's able to see all of you easily.
Hello, Ruth Kennedy.
Nice to meet you on back as well.
Hello.
So, any order? It's not mine.
Somebody's tapping. That's not your
I guess it's not mine either, so. Yes, please. était déjà là ou vous étiez plus vite que nous? No, because the moderator said the speakers will be waiting for you. So let's see. It's interesting stairs.
Yeah, very steep.
I write it down here so that I don't have to move up and down. You can watch online down here. This belongs to somebody.
Okay, may I invite everyone to take seat so that we can start more or less on time? Okay, so good afternoon. Welcome to this panel on simplifying the EU tax system to reduce compliance burden while safeguarding revenue, a very ambitious title. Let me say a few words to introduce the panelists. We'll do from the left to right. So Ruth Kennedy. Ruth is a Revenue Commissioner from Ireland, and if I'm not mistaken, she has been Revenue Commissioner since 2022. Before she had a career mixing public sector and private sector. Marcus Berer is one of the most well-known figures in Brussels, being the Director General of Business Europe since 2013, actually, for quite a while. Then on the right, we have the Member of the European Parliament, Mr. Rasmus Andressen, who is elected and a member of the FIS Committee, and he comes from the Green Party. And last but not least, Mrs. Tina Tuomela. She's a Chief Financial Officer of Fortum. For those of you who don't know the company, Fortum is one of the biggest energy provider in the Nordics. So a topic in an area which has become very, very sensitive nowadays. So let me start with a question to break the ice. From your different perspective, what do you see as the biggest challenge in simplifying tax system while safeguarding revenue? And we start with the co-host, Parliament. Rasmus.
Yes, thank you so much, and also thanks to all of you for participating in this lovely conference. I think we will have some interesting debates, not just right now here, but also like in the coming days. So I'm really looking forward to that. To go directly into your question, I think the most important point from a political perspective is to avoid a race to the bottom. First of all, it's completely clear we need to do more to simplify our tax system, but this doesn't mean that we should lose a lot of revenue. So it should be easier, the administrative burden should be less, but on the same side as the panel title already suggests, we should not lose revenues, and having a perspective not just like of simplification but also of doing this in a fair manner. I think it's also interesting to see that we can see a development right now where we can see that the EU, for example, not the EU as an institution but all member states together are losing 36 billion euro per year due to profit shifting, and I think this is a very impressive figure we should all have in mind also by discussing in the coming days how our tax system in the EU should be organized. So doing that in a way that administrative burden will be less, but we still are avoiding like a race to the bottom is key to us in the European Parliament. And secondly, then there are areas where I think we can see that we are not aware, like our taxation needs to be updated a lot. If we're talking about cryptocurrencies, for example, if we are talking about the energy taxation issue, then we can see that like the current rules are not fit for purpose, and this is why I think that those two priorities from the perspective of the Parliament, and especially also from a green perspective in the European Parliament, are the most important right now.
Thank you, Rasmus. Let me turn to Ruth. Ruth, you're sitting in a more comfortable chair than most of your colleagues in Europe, being from a country which has a very comfortable tax income. Nevertheless, what would be for you the main challenges in simplifying while preserving the tax income?
Thanks, Benjamin. And speaking from a tax authority perspective, we're an integrated tax and customs administration in Ireland, and data is the key to everything we do. Our mission is very simple. It's to fairly and efficiently collect taxes and duties and implement customs control. So we want to be fair and we want to be efficient. I think we've seen over the last 2 decades there's been a huge amount of change in the direct tax sphere, definitely. If you think back to nearly things like parent subsidiary, interest and royalties, ATAD, Pillar 2, all of those things have been notable changes, and that's just in the direct tax sphere. So I think it's probably a good time to take stock of where we are, look at what we have, look at what we're trying to achieve, and it's probably a good time to see what works for us and maybe what we could do better. I suppose from an administration's point of view, and to be clear, we'd love all the data we could get, because having all the data enables us to automate a lot of processes, it enables us to be efficient, it enables us to collect the right amount of tax. But I understand we have to strike the balance between what's proportionate and what's the burden on businesses. So I think it's really that striking that balance that's really important for us. Good quality data, real-time, timely data that allows us then to be as efficient as we can in collecting taxes and duties. And I think now, and as you mentioned, Rasmus, I mean, so much is moving digitally. If you talk about crypto is all digital. There's digital footprints everywhere. I think we're now at a time in 2026, given where technology is going, that we have opportunities not to consider reporting a burden, and I think that's the real challenge for us. We need to consider how reporting isn't a burden. If you think of the energy sector, none of us go and look at our energy bills and say, well, I turned the light on for 5 minutes today, and then I did something else for 5 minutes today. It all just happens without us ever seeing anything. And I think that's the key challenge, to allow us to have the data that's so important to administer the taxes, but also not to be a burden on businesses. And it's really about how we collect that data. I would challenge, I suppose, the narrative that reporting is burden, and I think it's actually an opportunity for us to change that.
Thank you. Let's turn to the business community, starting with Marcus. Simplification is very high on the agenda of Business Europe. So how would you set the balance between the two objectives?
Well, simplification is very high on our agenda because that's what we get from our members. I mean, you know that we regularly ask the question, why don't you invest in Europe? And there's many answers coming back, but let's say regulatory burden is always very high on the list, on top of the list. So that's something, and if you had a look at this Slido at the beginning, I mean, you can also see it reflected there. So that's one thing. Number two is, I mean, so far I don't disagree with anything I heard, because we think, I mean, the challenge is to actually combine simplification that strengthens competitiveness, hopefully, with revenue sustainability. I mean, and as we think, this is not a contradiction. I mean, it's about to merge these two issues and to do this in an optimal way. And when I hear reporting requirements, of course, we have duplications. And I think the trick will be to look at what can we simplify, eliminate, while maintaining the necessary information to collect taxes. So on this, I would not disagree. The feedback from our members has just been underlined by our recent reform barometer we have published last week for the macroeconomic dialogue, where it confirms, I mean, that regulatory burden reporting is still one of the main issues for our companies. So then, of course, I mean, I would look also a bit at the global arena. Of course, we have now a situation after the Pillar 2 rules in OECD where we basically have two systems, again with duplications. And let me underline, we have very much supported the OECD process. It is also something, which now turns out a bit differently, where you, of course, have other parts of the world who do not follow, or not follow totally, or not at the same speed. which means that we should think about what does it mean for us. I mean, of course, we still support the system, but we will need to maybe rethink our system and also see where do we have simplification there. Then there's a single market, of course. I think we have a fair amount of fragmentation. Of course, the chairman of the tax committee rightly said in the intro, of course we have unanimity, of course we have different rules and so on and so on. But of course there's something we will need to deal with. And then we think, I mean, tax systems should be coherent, predictable, proportionate, and as digital as possible. Of course, I mean, this is investment in infrastructures, but we think there's a big possibility here, because I think at the end, we are convinced that the most sustainable tax revenues come from a system that supports growth, investment, innovation. That's where it comes from, because, I mean, let's say, not happening investments don't create any tax base. But as I say, so far, I think we totally agree that, I mean, we need to simplify while maintaining the revenue sustainable.
Thank you. Tina, from your M&E point of view, how would you address this question?
Thank you. So first of all, so thank you for the invitation to the panel. I think it's very important to have the dialogue also with the business. So I try to bring some of the business view to the development. So I would start with the simplification. So it is really a key for our processes. To have the simple rules means that we can have a simple processes, streamline, have the efficient decision making, not do the decision on timely basis. So very important basis. While I agree, we need to also prevent tax abuse. This is very important. However, what we see that the preventing the tax abuse should really go to the actual abuse. I think the challenge is that it goes to everyone and sometimes brings an additional burden. So how do we make that it's fit for purpose and really targets the real issues what are on the table? What we usually realize that when the tax rules are aligned with the business drivers, so then they usually go hand by hand and also safeguard the revenue. Another point what I would like to raise up is that the complex rules don't allow sustainable outcome. And for example, in energy industry, there's predictability and also that we see that how the things are in the longer term. For example, what comes to the financing. So if the rules are changing all the time, the outcome is also unpredictable. And how we have tried to tackle is this, that we contact the tax authorities and prefer to have a discussion beforehand. It's good to know if something is working or not working before we do the decision. So working together with tax authorities, very important. Then I would like to also remind that business has a wider total tax footprint, not only the corporate income tax. If we look at the Fortum's tax footprint, we can see that the income tax is only half of the total paid taxes. So when companies make the revenue, it's income tax, but it's also other income.
Thank you. Actually, it was a good reminder. Corporate income tax in average in the European Union represented approximately 7% of the income of member states. So the proportion of resources brought by the corporate income tax is a bit out of proportion of the level of excitement that sometimes we have for discussion around it. Let's try to understand first a bit more the compliance burden, and I will start with a question to Marcus. So the European companies often say that taxation has become more and more complex over the years. What are the main sources of this complexity, seen from your members?
Well, I mean, microphone makes it easier. Well, I mean, it's rarely a single source. I mean, I think what we talk about is very often accumulation of effects, multiple layers of rules, and the interplay. And I mean, I hear the professor in the intro who basically said, when rules are set up, this is mostly for a good reason. And I don't question this, but the issue is we have many rules who are mostly set up for a good reason, and from time to time we need to say, okay, what is still necessary, where is the duplication? So first, it's these multiple layers. Of course, it's also that when you try to deal across the single market, and I think we are just ahead of seeing a pretty good proposal in the 28th regime to overcome this, not in tax, except one little footnote, but at least in company law. It is very important to deal with these different interpretations, fragmentation, and what have you. But I think it's mainly three factors. First, of course, it's the fragmentation across the member states. Because, of course, I mean, rules set minimum standards. I would appreciate that, of course, that's partly unavoidable given unanimity and what have you, but it is an issue for companies. So the fragmentation, and that very often you have different interpretations across the member states. Second, I need to go back to the reporting, it's the accumulation of reporting frameworks. So that's a huge issue. And I think we have seen specifically since 2011, so since the automatic exchange, we have seen a rapid expansion of reporting obligations. And again, not all of them to be doubted, but let's say the accumulation is making it difficult, and very often it is what we get from the companies, and I'm sure Tina will confirm this. It is similar pieces of information which come at different moments from different authorities, from a slightly different angle. So of course, I mean, that's something we need to think about. How do we make this more effective? How do we make it maybe more risk-based? How do we maybe come to a once is enough possibility, supported by digital possibilities? So, I mean, this is all things we need to discuss. And the third one is predictability. Because, of course, the system is developing, and of course, you cannot always. Gerasimos referred to the fact that, okay, there's not enough academia, maybe, but you cannot always plan what you need in 15 years. So I appreciate that up to a certain extent, it's a living body, but it's at the same time, it's sometimes not sufficiently predictable for companies. So that's something I would say this is the 3 points. Maybe one more point on the reporting. I think it is Mario Draghi who is saying basically more reports does not always mean more fiscal gains in his report. The European Court of Auditors recently also said, I mean, we might have a problem with effectiveness in reporting, so there's ample evidence there. And I think that the reporting is maybe too much, is well recognized by the institutions, certainly by the European Commission, and that's the way we need to go. And last sentence on this. So this is why we think it's very important that there will be an ambitious tax omnibus in June, if I understand correctly, to tackle these issues.
We are working indeed on a very ambitious package. Tina, your company is operating in a number of jurisdictions, high number actually. So what is your main source of headache? Is it the reporting obligation? Is it the tax rule? Or is it the difference between the various rules which are applicable at national level?
I think there are many small headaches. And I think the challenge is that if we think about the tax rules, reporting obligations or national differences, so they are all interlinked. I think Markus alluded very well the problematic what we have. But if I have to choose my biggest headache, so I think it is the underlying tax rules, and particularly the latest changes in the anti-abuse legislation. Not that the legislation itself is not good, but how it is implemented in different countries. So that comes very, very complex. And as Markus said, the cumulative impact of all of these is making it very, very difficult. Reporting requirements, yes, we don't have the common standard, or at least all the countries are implementing in their own way. Like the IT system, there I see a really big potential if we could have a common platform. So a lot of cost could be saved for the competitiveness of the industries and how we spend our money and time. One thing what I would like to also underline is that when we have these rules, we should be sure that we interpret them in the similar way. And that sometimes means that we need to seek for the EU law enforcement, either in the Court of Justice or the dispute resolutions. And this is not always so straightforward. So when we have the rules, so let's agree what is the common pace, and then let's make sure that we have rules to get the kind of the confirmation for the cases.
Thank you, Tina. Ruth, you are at the other end of the chain somehow. You're the recipient of all those reports, and you said yourself how important they are. They're a bit the food that keeps the tax administration alive and active and make sure that you can calculate the taxes which are due and do the audit. How would you balance this constant need for more information and also the call from businesses and citizens to keep it manageable?
Yeah, I think, as we said, data is really important to an administration, and how we collect it is also really important. I think we need to look at what it is we need and make sure that everything we're asking for, we're actually using it. There can be a temptation at times to request information that we think we might need in the future, and I think we need to be cognizant of the data we're asking for and making sure that we're using it to the best of our abilities. As you say, we get a lot of information both nationally and then within the EU and further afield within the OECD. Some of the challenges we have with that data is often the quality of the data and then the taxpayer matching that's required. So again, trying to assign the correct taxpayer to the data can be challenging at times. I think there's some interesting developments happening around eIDAS and digital wallets and things, because I said everything is now digital. So a lot of the legislation still comes from a time back in the early 2000s where we were in a different era. So I think there's a really good opportunity now to look at the legislation and the directives, but look at them from a digital perspective. And actually what we found nationally looking at legislation, when you work together between the policy people and the administration people, but also the stakeholders, to understand how you can make the legislation administrable with the least burden possible. So we had some interesting examples nationally where we integrated all our reporting with employers' payroll software. So previously, employers had a once-a-year reporting obligation where you're aggregating lots of data and there's room and scope for error and omission, as well as it creates this kind of cliff and burden at a particular time in the year. We changed that so that now every time someone is paid, the tax administration seamlessly gets that reporting without the employer doing anything other than the value-add tax, which is our value-add task, which is to pay their staff. And we know that's really important. So if you can make that reporting and the rules of the tax be a byproduct of business value tasks that are already being done, you can absolutely simplify it, but also make sure the quality of the data you get is correct. So I think it's trying to balance both of those, but it is designing the legislation in a way that it is administrable. And we're seeing now moves with some of the fiscalis groups here within the EU around better regulation, where tax administrations are working together across the EU along with policy people to try and make sure what we legislate for is administrable in the best manner.
Thank you, Ruth. Let's focus a minute on the role of the EU. Tax policy, particularly for direct taxation, remains primarily a national competence. We have a set of EU legislation with around 17 directives, but that's the tip of the iceberg if you compare it with the national legislation. So how far, that's a question for you, Rasmus, how far can we simplify the tax system across member states? And can we genuinely generate a simplification without deeper coordination or harmonization?
I mean, that's a question I also could give back to you, also with the excellent work you are doing and the proposals you are planning to come up with. But I just would like to start out by saying that I think what we can and should do is maybe not the same. So what I think we should do is as much harmonization as possible. And some colleagues here on the panel already also mentioned the question on anonymity on a lot of taxation questions, which is something I think, and that's also a word coming up at the slide at the beginning of the conference, is quite painful, because it means that we are not going the steps I think we need to go also when it comes to taxation. Not on each question, on many of those questions, it's fine it's the national competence and the EU doesn't need to do anything, but on some of the topics we discussed here already in the initial statements, I think it's quite a problem. Still, the EU can do much more, I think, and there are also some good examples for this. I mean, looking in, for example, on the directives on administrative cooperation, the famous DAX, I think it's at 8 or 9 we are right now, are quite good example on, things like information exchange, which is, important as well, as we all know, especially when we are talking about the enforcement issue, also some others already mentioned. So this is something where I think the EU plays an excellent role, but I can also tell you from the debates we are facing with some of the member states, it's always also quite a challenge to get them convinced that we need some more there, and we need a better exchange of information when it comes to different examples. But I think it's an excellent example of what we can do. We had this is not simplification, but it's taxation in an important area during the war in Ukraine and the question on the energy prices. For the first time, the EU came up with an idea of creating a windfall levy. It was not like a real levy, but still, like, there was a bit more coordination approach there, which at least created some income, and it stopped a bit like the development on the energy prices, looking on what kind of profit some of the energy companies made. So if there is a will, much more is possible. That's what I want to say with that example. We can discuss the topic and so on, but this is what I think is the most important part, and there is a need for that, and this is what I would like to mention maybe as one of the next steps we should go on a more pragmatic perspective, because as a Green, I'm always strong and good in fighting against anonymity and big proposals, but on a very concrete manner where we can see that firms, for example, operating on the single market compared to the domestic firms are having compliance costs which are close to 70% higher than firms operating only at domestic markets. And this is this is a figure I think is much too high, and we need to reduce that as much as possible. And Mario Draghi was already mentioned, and it's true the reporting issue is one part of it, but there are other elements as well, and especially when we are looking on compliance costs for firms operating on the single market, also when it comes to taxation, I think we need to do much better than what we are facing right now.
Thank you, Rasmus. You mentioned the solidarity contribution, which remains to date the one and only cases where we have adopted something by QMV in the tax field. If we put it aside, because it was temporary and exceptional, the legal base that we use not only for direct taxation does not allow the use of regulations, only directive. And directive needs to be transposed, which brings me to my next question to Marcus. We all know that transposition process sometimes create a risk on its own, which is a risk of gold plating. So is it a serious issue in Europe? What feedback do you get from your member?
No, but I think gold plating is a serious issue. And if I look at what has been discussed in Altenbiesen and what is now probably going to be in the conclusions of the European Council end of the week, I think it's important to address all the layers. So it's first, I mean, we need to have a clear, not ambiguous legislation, which doesn't leave too much time, too much space for interpretation, because I think one of the issues we are having is that our companies are sometimes faced with 27 different interpretations of certain things across the continent, which I suppose leads to what Rasmus rightly mentioned, that I mean then the cost for a company dealing in the single market is exponentially high, which is a problem. Because I mean we want companies to operate in the single market. We know that I mean we only trade, for instance, 20% compared to the GDP in the single market as opposed to 70% in the US. So that's something where we have still scope to improve. So, but that's one thing. Two is, I think we will need to simplify what I already addressed. So we support the OECD Pillar 2, but I mean it means that we now have all the obligations which come from this pillar, and we have all the obligations which come from the existing EU anti-avoidance framework. And I think it's for a good reason that the Council has asked to look into this and to look, I mean, where's duplications which can be simplified and rationalized. And I think there's a point where we would see a lot of scope, or let me say it in another word, I mean, I think we will need to have some offsetting here. Because I think we have been, as far as this global development has been concerned, we have been a first mover, we have been a far mover. I don't question this, and you know that we've also supported the special provisions that were necessary to keep the whole thing afloat. But it means we will need to have some offsetting in order to reduce it here. And then, of course, I mean, gold plating is always an issue, but it's, I mean, for me it's interesting, across the different areas of policy, as different they might be, at the end you very often end up with the same instruments, with the same obstacles, and with the same things you need to deal with in order to hopefully make Europe a better place to invest.
Thank you. We cannot have regulations, only directive, and the treaty is not about to change. So is there something that we can do better for avoiding interpretation of the same rule going all over the place between member states? And Ruth, from where you sit, do you think there is scope for more work, more coordination actually between member state and member state tax administration to agree in common on how to interpret the rule?
Yeah, I think there's good opportunity to do that, and again, probably the time is very good at the moment. We've already seen it start, so it's not that it hasn't started. So on the Pillar 2 directive, there was some really good work done by TG Taxud along with the member states to come up with agreed interpretations, looking at fact patterns, understanding how they might apply, and it resulted in the frequently asked questions that are now published, so that all member states work together to get that common interpretation, and absolutely understand for businesses that are working across a multitude of jurisdictions how important that is. We've also seen it in the working parties as well. So again, we've started doing some good work together in the working parties. Sometimes, and depending on countries, it depends who attends, so whether it's the administration or the policy area, but I think there's really good opportunities to include administrations as early as possible, because ultimately it's the administration that will administer the regime, so the earlier they're included, the better. We've also seen in OECD as well, in things like the crypto asset reporting framework, again, where there's been work done by countries together to come up with a set of interpretations and frequently asked questions. So I absolutely think it's something we need to do more of. You can see the foundations that are starting to be laid, and I think it's something that will help businesses in terms of having that common interpretation. I mean, it is complicated stuff. It isn't necessarily all simple, and there's reasons why there has to be a level of complexity when you look at what we're dealing with. But I think, again, if we can get to that common interpretation, at least it helps, I suppose, lift the veil on some of the complexity. And so I think someone said certainty earlier was something that's important, and predictability. Again, getting to that common interpretation, particularly on cross-jurisdictional matters, I think can help provide that certainty and that predictability. So some good starting moves done, and I also mentioned that better regulation fiscalis group, which is tax administrations working together as well on the administration of those directives. I think joining both the policy and the administration together as early as possible, member states coming together, working with DG TaxUD, and coming to, where possible, those common interpretations, I think will help with that predictability and certainty that businesses are looking for.
Thank you, Ruth. Tina, turning to you, you have a rich experience in the private sector. You're CFO today, as we said in the introduction. So is this a theoretical discussion, or is it a discussion with real implication? That is, those differences in the interpretation of the rule, this gold plating, this complexity, is it a driver that influences strongly your investment decision? Or it's more a variation in the level of pain that you have, but it's at the periphery of your investment decision?
Well, I think, first of all, investment is something what Europe needs, and the growth. And I would say the tax and the different regulation is a real issue. So when we do our investment calculation, so of course tax is the one consideration. It's not all consideration. So, but all important one which impacts the profits, cash flow, and ultimately how much we have capacity to invest. I think when we look at the project level, taxes might seem fairly simple, but then when I contact my tax department and we start to look at that, how that is in real world, so in legal company, in the overall funding context, it starts to be very complicated because of these very many different rules. I think the tax-related limitation might change the outcome of the investment calculation, so by adding extra costs or needing more funding, or in the worst case, there is a tax cost without that we do the profits. And I think for energy intensive industry, or where the capital in general is needed a lot, so usually the timing of the investments are long. Also the lead time is taking long. So long-term predictable financing and the tax treatment is very important. And as we know that the environment is volatile, all the time happens something, and the EBITDA might change because of the external factors. However well we do our calculations and predictions, so EBITDA might be volatile, and at the same time interest cost increases, and we are not able to deduct the interest. In the worst case, we have simulated couple of very big investments with the long lead time, so the additional funding need might be even up to 20%. So it is a real case and could slow down the investments. So therefore, clarity and the decision beforehand, as also Ruth was mentioning, very, very important. What comes to the gold plating, what was mentioned also, so what we see that they also make the calculation difficult because they add the complexity and it's not providing the level playing field. So more tax neutrality, and then if the support is needed, so support could be more direct.
Thank you. Let's move to another block. We have focused so far on the need for simplification, but it's important to understand better where to draw the line and to balance simplification with other policy priorities. It was reminded at the beginning of this panel discussion that behind each anti-abuse rule, usually there's a good reason why it was created. The problem we face is that maybe we have piled up too many anti-abuse rules, but it makes it tricky when you simplify to decide which one do you want to simplify and how do you balance the two. So Rasmus, from a policymaker point of view, how to find the right balance and to ensure that the simplification of the tax rules does not go too far in undermining the objective of preventing tax abuses?
Well, for me, this is the core question when we are talking about simplification. What does simplification mean? Does it mean to simplify the rules, or does it mean to kill the rules? And in the current political environment, and I mean, you will have other panels with colleagues from other political groups where they can reply to that question. My feeling is sometimes that for many it means to kill the rules. And maybe sometimes it's okay to kill rules because they shouldn't exist because of nothing. But on the other side, especially when we're looking into how tax policy had developed and taxation issues, especially when we are talking about also some current scandals we had in the past 10 or 15 years. There is a reason for that, and this means that I think we really need to protect especially rules, creating more transparency, creating like common standards which makes it easier, for example on the exchange of information, as I already said earlier in the panel, to have an effective enforcement where different authorities at different levels, national, EU, but also like at the global stage, but also civil society and research can work together and to ensure that there is an effectiveness in our efforts, for example, to fight tax avoidance and other areas. Most of us, I guess, can agree on that they are still important. So this is what I'm looking really much forward to, having in mind of what kind of work you are doing right now, and on the question on the omnibus, or also on the different DACs I already mentioned earlier on, if they are living up to that or if they are not living up to that. This is for me the core question when it comes to the efforts we are going like inside of the EU and the work we have to do in the next months. On the other side, and this was already mentioned, I would be very skeptical if we are taking the current dynamics with the US administration as an excuse to kill some of the agreements we had worked on in the past at the global stage. Of course, with a very important administration when it comes to taxation at a global level, which is definitely a region we still need to care about. Things had changed a lot, and also in the way we are debating about the OECD agreement, for example, which was already mentioned. But on the other side, I think the EU should be a leading force and continue being a leading force, and maybe Commissioner Dombrovskis will tell us a little bit more about that later on in this event, when it comes to global collaboration in the taxation, when it comes to different questions of taxation, because the need for this is still there, even if we have we have to deal with the US president, which is a bit more complicated than some of the other US presidents. I mean, this had always not been easy, I know, but it's more complicated now. But I would like to say that I'm heavily against moving away from the implementation of agreements we did in the past, and I would also like to urge us all together, not just to have a look on the OECD and on our collaboration with the US, but also to have a look into what is actually going on in the United Nations. We still have a lot of other parts of the world, regions, countries, who have an interest in working together also on taxation issues at the global stage with the European Union, and we should use that, and we should maybe use that even more than we did in the past. And this is not like a remark to the work you are doing, like in the different DGs in the Commission. You are doing this, I know this very well, but this is more like a remark to us, like policymakers in the Parliament, in the member states, but also business and other who are taking part of those debates.
Thank you. Let me turn to Ruth. Ruth, you're the recipient of all those reports. A simplification process means that down the road, there are some information that you get today that you might not get any longer. So how comfortable are you with the process, and what risks do you see from where you sit, that is the tax administration point of view?
Yeah, so it's always a balancing act, isn't it? And it's understanding the value of the data we get and how we use it. And potentially there's some very high value data which we would obviously like to keep. And maybe as we do the review, you can see there's some data that isn't of the same value and that there are possibilities potentially there. Ultimately, from an administration, the policy will be set, the legislation, the directives will be passed, and we then need to be able to administer those. So in any changing scenario, which is what will happen, we have to make sure that we administer the two regimes, if that makes sense. So given the time before tax returns are filed, not real time per se, we need to make sure that we are administering an old set of rules for the years in which the old set of rules apply, and a new set of rules. And again, in terms of the guidance we can provide for businesses and tax agents, and making sure just all our staff and resources are able to administer both. As you said, we use the data we receive in lots of areas. We use it in pre-filling tax returns, we use it in tax computations, we use it in risk analysis. So the systems and the processes we've built around those will obviously have to change if something changes, and that's what happens always when legislation changes. So again, we need to look at what were our processes, what are our systems at the moment, and then if there's a new set of rules, what changes do we need to make to be able to continue to risk assess, to find high value cases, to understand where the risk exists, because we'll always have more risk than we will have staff able to address. But ultimately what we want to do is make the tax just happen and really make it as hard as possible to be non-compliant by building compliance in through the design of our legislation and through the design of our administration. So I think really a key challenge will be kind of managing those two regimes that will inevitably exist, and it's something administrations have to do all the time, both with national legislation that changes and national rules that change. I suppose key would be, from our point as an administration, not to lose that high value data and really try and understand how we can find ways to make it as easy as possible to provide that data. I think we need to look more and more to the idea of real time, more and more to the idea of digital integration. We've seen the Forum on Tax Admin in the OECD looking at that tax administration 3.0, which really looks at application programming interfaces, allowing systems to talk to each other. And even we see in the customs sphere, which we also manage, potentially possibilities, rather than sending data, that the tax administration has the possibility to request the data or have access to the business systems when we need it. And maybe that's a way to look at it as well. So I suppose it is that administering both regimes, making sure guidance and interpretation is clear, and making sure really that the high value assets don't get lost through the simplification, the changing of the regimes.
Allow me a follow-up question. Since you alluded to the custom data hub, do you think we should move progressively towards a tax data hub?
I suppose you'd have to say what's the scope of any such thing. I mean, on the indirect tax side, we know that we're moving towards a central VIS, so VAT in the digital age will bring in e-invoicing for intra-community sales. In Ireland, we're looking at bringing it in for domestic reporting as well. So in that way, we streamline the national reporting requirements and the EU reporting requirements, because as we say, we see many businesses operating both nationally and within the single market. And again, the whole aim of that is a business issues an e-invoice, that's a business transaction. The reporting to the tax administration is seamless. It's not seen. What they're doing is their business transaction, an invoice. No business can work without an invoice. The reporting that happens to the tax administration happens under the bonnets, shall we say. So there is no burden on it. So I think we can definitely see in things like central VIS a move to that. Whether there's other exchange of information that potentially could be held centrally, it's something worth considering.
Thank you. In the most recent DAC, we have already moved from a system of exchange to a repository. So the direction is clear. Marcus, your organization, Business Europe, is extremely involved in the discussion surrounding the simplification process, including in the tax field. Do you think, from what you have heard, that we're heading in the right direction? And more important, as you know, we will need unanimity, and getting unanimity in the tax field can be extremely difficult from experience. It's like tossing a coin sometimes and hoping it falls on the edge. So the more ambitious the package, the more difficult it is to get unanimity. What would be your message as Business Europe to Member States?
Well, I mean, first, are we satisfied with the direction? I think it's clear that we welcome the renewed focus on simplification, as we welcome the renewed focus on competitiveness. We think it's a total necessity. And we also try to be fair. I mean, I think when you've seen the paper we have produced for Arden Biesen, which we called From Ambition to Delivery, we have tried to have it in 3 segments. So the first one, to acknowledge what has already been done. Then to, of course, underline chapter by chapter what is still missing, and then what we think should be done this year. So, and this is, I think, reflected in our latest surveys, so to say, because I already mentioned this reform barometer we published last week, and there you can see that 60% of our members acknowledge that the focus of the Commission has changed and is putting the finger on a couple of right things. So I think that's clear, and that's a consequence of the aim of the business community trying to be fair, which was what is going on. Because to constantly say it's not enough, doesn't bring us forward. That's one. The second part, of course, is if we ask, does it reach the companies on the ground, or is it yet having a positive effect on a positive or an improvement of Europe as an investment location? The answer is 80% of our members say no. So we are a bit in this inter-time where it's really about delivery to building on some first steps that have been done. We produce more and more results. Companies on the ground would consider as an improvement of going in the right direction to hopefully create a virtuous circle. That they would say, okay, it's getting better. If we have the money, we should invest a bit more, and so on and so on. I mean, I'm simplifying, but I think that's what it is. And we are now in this dangerous phase where, for the time being, we are a bit flying on the wind we are producing on the positive steps that are taken. And now we rapidly need to follow suit with concrete steps which are felt by the companies themselves. And of course, this goes through many fields. You know that we have also produced this, what we call the Business Europe Omnibook, with 138 concrete proposals. So we also try to fill the pipeline. So far, I think 8% have been taken up, so there is further opportunities. And of course, tax is also an important one. And I mean, to respond to Rasmus, I think we are not saying we should drop anything because of the US. I mean, I think it's clear that we have this process. We still consider it right. We just say we need to try to reduce the duplications, which obviously are there because now we have two concepts to follow, and we've also made proposals. We've also made proposals for this. To your other question, I mean, what do I tell member states? Well, not so easy. I think it's important to be ambitious. I mean, I have similar debates with commissioners in other fields who tell me, yes, but how do we get it through Parliament? And honestly, I'm a strong believer, maybe also compared to other parts of the world, in checks and balances and separation of powers. So my view is the role of the Commission is to come up, of course, I mean, not proposing something which has no chance to fly, but to come up with a very feasible proposal. This is why the treaties say the Commission has the power to propose, and then the next step is that all interested players, as always, will need to try to bring it through co-decision. But I think the more we mix up these processes before proposing, the more this adds to the frustration European citizens sometimes have at the ground. Because when and I said we always try to be fair, but when I'm going out there and say, yes, now we are reducing the regulatory burden by 25%. So what I get from companies sometimes is wonderful. Now you guys, and let's face it, I mean, they all put us in the same basket. I mean, working in Brussels, especially, as you mentioned, for a long time, so we are all in the same boat. So now you guys will repair part of the problem you've created yourself, I simplify, and you want some applause for it. And I say no. But what I mean is, I think it's really a question of responsibility, because otherwise you end up with, and I don't say this is tax policy specifically, this is in many areas, where you have results where it's very difficult to explain them to companies on the ground or citizens. And then at the end it's okay, but it's not clear who was responsible. So I'm a big fan of responsibilities, which means step one is an ambitious omnibus proposal of the European Commission, because last sentence, I know I've been long, but it was 2 questions. I think it's clear we will need to make it easier to do business in Europe, because otherwise less business will happen in Europe, and that's what we need is the opposite.
Thank you. Let me turn to Tina. Tina, your company is big, very big, and therefore it has the pleasure to be subject to Pillar 2, which is certainly a mixed blessing for all person dealing with the complexity of Pillar 2. Do you think the existence of Pillar 2 would warrant alleviating some of the other rules that apply to you?
Well, first of all, we support the Pillar 2. So we think that the objectives of it is very good, creating the level playing field and also ensuring the fair taxation. So in that respect, so good work done, progress. At the same time, we believe that it is overlapping with some of the rules, particularly what comes to the tax avoidance. So CFC, interest limitation, hybrid mismatch rules could be removed in our view, because the benefit of having all, so it's very limited, and we could take the extra layer away. However, if we look at the Pillar 2, so in its current form, we could say that it is still very difficult to understand. It is complex and requires quite a lot of work. It might be that it is the learning experience. We are also learning, studying how it works. But also, I think that we could take the lessons learned from the previous legislation development and do the simplification. One example, for example, is that now Finland is planning to reduce the tax rate from 20 to 18%. So good initiative to incentivize for investments and growth. But for example, in our case, so we will fall outside of the safe haven rules, and we need to do all the compliance burden, even though we know that we are not paying more taxes. So this kind of simplifications and clarification would be welcomed. So in general, again, if the revenues are aligned with the business drivers and the real cases, so that would result, I think, the best result for the companies and best result for the tax authorities.
Thank you. I come to the last question from this round for all speakers, and then we will have the possibility, I think, to take a few questions from the audience, even in the room or virtual. So this question, which is a bit of a difficult one, if you could implement one reform tomorrow to simplify taxes in Europe, what would it be? And I would ask to each panelist to pick his favorite tax reform. Maybe let's take the order of the chair. Ruth, you want to start?
Yeah, if I had a magic wand, I suppose I'm looking at it always from the administration perspective. So again, it's the legislation designed with digitalisation in mind and the administrability in mind. So designing the legislation, thinking of how you administer it and administering it digitally. Short, sweet.
Indeed. Marcus.
Well, to be brief, because normally I say, okay, I cannot limit to 1 point, but I limit it to 1 point. I mean, if we could introduce a binding report once only principle in tax reporting, I mean, using digital means, I think this could be an enormous step forward.
Rasmus?
If I'm the only one who has to decide on this, then I would move from anonymity to majority decisions in taxation matters. On a more pragmatic perspective, I would choose an agreement on BEFIT because it's at the table, and I think we should agree on that soon.
Thank you. Tina?
Well, I would focus on promoting growth. And if I look at the growth from capital-intensive industries, so it would be that the infra exemption would be included. So that would be a very clear and helpful change to make the growth happen. And Markus did say my second thought, so simplify reporting. So,
thank you. Let's take some questions from the audience. Yes, I see 2 hands raised over there. People with microphone. Yes, the microphone are coming. And we have also a Slido where people can ask questions so as to allow people which are not physically in the room, since we had a limitation in the number of seats, to also ask questions. So let's ask first a physical question. Can you just introduce yourself and say to whom your question is addressed?
Great, thank you. My name's Tim Law, Engaged Consulting. I'm an advisor on tax transparency reporting and things like public country-by-country reporting. So my question, first of all, I echo the comments about what business really wants is 3 things. It wants simplicity, it wants certainty, and it wants certainty again because it bears repeating. One of the things that undermines the simplicity, I agree, is divergence when it comes to transposition. So greater alignment in transposition would clearly benefit in the long term alignment and simplicity. What do you see, this is to any members of the panel, what do you see as the barriers to that greater alignment in transposition? And are those structural barriers or political barriers, or actually probably a bit of each?
Who wants to take the question? Rasmus.
At least I can start. I think it's a bit of each, because we also just briefly talked about that anonymity issue, where we can see that there are a lot of different national perspectives on taxation with a lot of different traditions. Everything can agree at the national stage that they are the best, and that they definitely should not be too much European Union involvement in national taxation issues. And for some countries, this is even more true than for others. And this gives us a situation where everybody, in theory, can agree on that we need to align it a bit more, but nobody wants to give the competence to the EU level, like from a member state's perspective. And I mean, I'm half Danish, half German, so I know very different taxation systems, and I also know very different national debates about taxation. But I think in both countries, and I think if you're going a bit more to the north, not to Finland, but to Sweden, it's even more true, and we can see that in a lot of issues, and this is why it's very complicated issue, because I think it's a conflict also of competences, and especially some member states, maybe who are also doing very well, like from a national perspective, are not really interested in having a stronger alignment at EU level.
Yes, we have Said from Brookberg, and then the gentleman behind, and then we will take a question from the online audience.
Hi, Simon Said from Bloomberg. I have a question for Ruth, and then one for Benjamin, if you're going to take one.
I'm not. I'm a moderator. I'm not a panelist.
Well, I mean, I lost the question.
Today I have an easy life.
My question is, Ruth, Benjamin mentioned something about whether reports that you're going to be getting, whether there's a change in that happening. My question is, are you concerned that with this tax omnibus that's coming in June, that's going to have many changes to the reporting, whether you're also concerned whether that's going to have an impact on revenue? And so to that, my question to Benjamin, and again, you're willing to answer or not, is whether you can guarantee if the omnibus is going to have an impact on the revenue that authorities will be collecting.
So I suppose from my perspective, I look at the administration of it rather than the policies of it. And without knowing what's included, it's very hard to say what the impact on revenues would be. I suppose we look at the data we get and how we use that to collect the right tax at the right time. Until the details of any proposed omnibus are agreed, it won't be understood what changes, and different countries have different regimes as well, so I don't know that it'll be universal across all countries, but I suppose key for us is to collect the right tax, whatever the legislation is.
Okay, just to say a few words to answer your question and make an exception to what I just said. I think when you focus on the tax impact, it's important to have an holistic approach and not look at only the short term. By definition, any reform of taxation can have a short-term impact. The question is whether the medium to long-term impact or benefit outweigh the immediate impact of the short-term measure. When it was decided, when the European Union was created, to terminate the custom duty in the single market, to build it, that had a negative immediate impact on the resources of all member states. But the positive impact on growth and investment were far bigger. So you have a time difference sometimes, which is you can have an immediate negative impact, which is compensated by a medium to long-term positive one. We're in the process of doing the impact assessment.
Mariano Giralt, I'm working at RackWest, a European fintech company specialized on withholding tax processing. And Ruth, it's a question for you. I mean, you mentioned a couple of times about the digitalization, right? And also the challenges of data. I was wondering if you think we are, in Europe, embracing the opportunities that we are having with advanced technologies, new technologies, in particular in the area of taxation. Your thoughts, please. Thank you.
Yeah, I think it's different across Europe, and I think there's absolutely a lot more that we can do and we can look at. I was actually talking with my Hungarian colleague there earlier around how they're using blockchain in payroll processing in Hungary. As I said, in Ireland, we're moving to as much real-time reporting as possible. The idea of a tax return, if you think about it, is based in a paper and an ink and quill type environment rather than a digital environment. So creating these kind of false due dates where a company has to aggregate a lot of data and create a kind of a false type of reporting requirement doesn't sit naturally with a digital world. I think we all know if we were designing a tax system today, not a tax system that we had for many decades, we design it very differently. I mean, payment, as you say, you're in fintech, payment is all digital now. There's a digital footprint everywhere. And ultimately what we'd like to do is actually nearly make ourselves invisible, allow the reporting just happen using technology, and the payment just happen. None of us really think about our mobile phone bills. I mean, I'm in Brussels today. I'm not thinking, oh, what's the, how long did I make a phone call for, and what do I have to write down to say that's how long that call was, and that's what the price of it's going to be. We all just trust our energy bills, we all just trust our mobile phone bills, and they all just happen. I think we've absolute opportunities to do that. And that hasn't even got to artificial intelligence yet, and generative artificial intelligence. I mean, tax administrations have been using artificial intelligence for years, be it in risk assessment, be it in rules, be it in kind of analytics. But I think the leap now that has been made with generative artificial intelligence offers a whole new set of opportunities. And one thing I'm challenging us to think about in Ireland is, what is a tax return in the age of AI? So a tax return was a paper construct which we then made available on the internet or turned it into XML as a reporting structure. But actually now, in the age of AI, what is it we need? And even in the customs sphere, talking about the Customs Data Hub recently over here, it's looking at AI is much better able to handle unstructured data and find the sense in that. So do we need to formalise how you provide us the data, or do we just need to have access to it in any format that you have it, and that allows us to do what we want? So I think there's absolutely huge opportunities. The difficulty we all have is we have legacy technology and we have legacy legislation, and how you make that move. But I think, and that's why I'm keen that any legislation we develop now has to be thought of in terms of digital implementation and administration, rather than the old ways of thinking. And to do that, you need teams that have all sorts of skills working together. It's not just your old lawyers and lawyer linguists working together. You actually need IT people. You nearly need the philosophers and the ethics and all of those disciplines working together actually to design a tax administration for a digital era.
Thank you, Ruth. Let's take one or two questions online, because we have many people in the room, but there's a much bigger audience which is following us online. The first one which has been asked is, would it help certainty, predictability if the European Commission would issue non-binding position as to how certain provision of directive should be interpreted? Tina, you want to take it?
Yes. Well, I think the certainty and predictability, as mentioned, are the key to make the long-term investment. And I think that even non-binding position would be very helpful, because that's the dialogue. It's the dialogue between the business and authorities and EC to understand what are the business drivers, what are the true kind of revenue sources, and how to handle that. So absolutely all kind of dialogue and guidance would be helpful.
Thank you. The other question we got online is of more philosophical nature, so I don't know whether we have a philosopher among our panelists. What is meant by fair taxation? Marcus, do you want to?
I'm not sure whether I'm a core philosopher, but I mean, look, I mean, I also to respond some of the questions which were out there. I think at the beginning, for me, simplification is clearly not something which should reduce the tax base or the income. And to bring one tangible example is withholding taxes. I think we are in a situation where I hear from many companies that I mean, in principle, they should get their money back because it was just a withholding tax. Now we have a new system where there's anyhow this minimum floor of 15%. And then I hear from companies that, let's say, the procedures are so complex and so unsure in certain instances that they simply give up. So that's something where I say, I mean, this is a contradiction. But not a contradiction between what is paid and simplicity. We should try to overcome in things like the omnibus. This is one. Number two is, and we have talked a bit about profit shift and these things. So I mean, let me clearly say, I think we have a huge majority of companies, and I know this from all our debates, who are, I mean, first I think aggressive tax planning is often rather a consequence of complexity than the opposite. So that's number one. So I think simplicity can help here. And number two, I mean, if I look at the reaction of many of our members to the 15%, and I think Tina is a good example, to the 15% threshold and the rules around it, it's a very positive one. You have a lot of statements going in this direction. So I think, honestly, fair, I mean, if you go in the direction of repetition of, I mean, maybe one sentence. I mean, I think it's very clear that our system is more sustainable than other systems in the world when you come to a certain repetition, because it gives us, let's say, more sustainability in what we consider the European way of life. I mean, that's something I would always underwrite. At the same time, we need to make it simple, competitive, functional, and effective enough that we have enough companies investing here in order to make sure that we are able to sustain our way of life. And that's what I would call fairness the European way.
Thank you. I've seen Elodie frantically raising her arm. Elodie, from Tax Notes.
Thank you. I didn't want to raise expectation. My question is quite simple. It's to Ruth. You mentioned, I don't want to misquote you, but you mentioned data that might not be used. I was wondering if you've identified data that you receive from the DAC and that maybe doesn't serve you as tax administration or as a deterrent against tax abuse. And my second question is to bounce back on what Benjamin asked you earlier about a tax data hub. You seemed open for VAT or indirect taxation, but less so for direct taxation. Am I interpreting your answer properly? Thank you.
So on the first one, I suppose it's how valuable each piece of data is and how you use it. So all data tax administration gets will be used, but you can probably assign higher value to some data rather than others. I did also say we often have difficulty with both data quality and assigning the data to a taxpayer as well with having to do matching techniques. So I think if you're looking for a proportionate and a balance, potentially you can assess data on the value it adds, and potentially then if there's lower value data, if there is data that you look at eliminating, that's maybe the place you start from. Very much the higher value data, you wouldn't start from there. But all data is used in the round. I mean, we use all our data together, so you can't pinpoint, well, we found that risk just from DAC data. It's actually our customs data, our VAT data, our third-party domestic reporting, our domestic tax returns, you have to assess all the data in the round in terms of finding risk. In terms of central data hubs, it really depends what you're looking to use in it. I was saying central visa is something that is coming in under VAT and the Digital Age Directive, and in customs, under the proposed customs reform, there will be a central data hub. We have with CSAP as well, central data collected nationally and then shared centrally. Again, I think you just need to look at what is the data, who's using it, where is it collected, and how you can then make sure you have that holistic view of risk. Because as I said, we're not risking just on the DAC data. It's adding the DAC data to all the other data that we hold within the administration. And actually that's where, when you're a tax and customs administration, you're uniquely positioned to look at both your customs data and your tax data, and that can give you insights as well. So I think it's something we need to look at and assess to see, does it give the value for both stakeholders on the business side with maybe a single interface, but also from an administrative perspective as well.
Thank you, Ruth. We have reached the end of the time allocated to us exactly 20 seconds ago. So it's time to wrap up, and I invite you to give a big round of applause to the member of this panel. Thank you.
Thank you. Thank you so much, Mr. Angel, all panelists, for your wonderful contribution during this panel. What a wonderful example of time management, 20 seconds. They went over 7 minutes on the other side, hence me being late here. I was supposed to have been here already 7 minutes ago, but they took up the entire 7 minutes. So thank you for your wonderful moderation and time management. As you've seen, we're a bit behind schedule, which is not bad because it's a good thing. It means that there's a lot that had to be dealt with. I was in between both rooms, so I didn't follow it completely, but what I noticed is that same topics came coming up. Sometimes I thought that the people over there should have been here, because if they were talking about growth and innovation, they were talking about simplicity. And they had to summarize it as give us stable systems, give us simple systems, give us systems that work. So they had to summarize it in one phrase, which most of them couldn't do it because that's a difficult task to do it. I tried to summarize it in one word, and I called it KISS, keep it simple, stupid. And it goes for a lot of things, and it especially goes for tax systems as well. Make them simple so that you can explain them to everyone involved, and that means every one of us. Now, for me, there's only one thing to do, well, not for today, but for the moment, that is to invite you all to have a coffee and tea right where you had it when upon your arrival. Notice, though, that impossible to be back 4:15, so we will be back 4:45, so 4:45. Everyone back in the room where your next session is. So please double check where you have your next session, whether it's on the mezzanine or over here. So you might want to double check that, and then we'll see you all back here or on the mezzanine level 4:45. Thank you once more for all, and enjoy the coffee break and the wonderful cars you will see around.
Take a group picture if you don't mind.
too many things here because I'm just still like all of the way into the 60. You have your own table. It's also smaller, so it's embarrassing for a small group of small girls. Okay. I should have long trousers when we sit here.
Okay, please come in and take a seat so that we can start. We have just an hour, which is not a lot of time, for such an interesting topic. Okay, good afternoon to everyone. Thanks a lot for being there with us for this panel on controlling the growth of tax expenditure while preserving competitiveness and fairness. So tax expenditure, as we know them, are relief measures in favor of certain taxpayers or certain economic, social, or cultural activities. They are the result of deliberate political choice and are very often an alternative to spending, direct spending by government in the forms of grants or subsidies. They have become in the last years a central element of modern tax policy. And the measures are very often designed to support investment, to support innovation, environmental goals, or support households. They are and can be very effective policy tools, but they also come with a number of substantial challenges. First, even though they are a decrease of revenue and the net spending, they can have a very substantial fiscal cost. Second, they often bear less transparency and less accountability. It is historically quite noticeable that they have and they remain less discussed by parliaments, and that their exhaustive list or transparency is still lacking in many member states. They also lack systematic evaluation and systematic follow-up of evaluation that is being done. There's an issue also of their fairness and effectiveness, and because the evaluation is insufficient, it's sometimes very difficult to establish whether they achieve their objectives or whether they simply lead to windfall gains for certain taxpayers. And finally, they also add to the complexity of the tax system, making it more difficult to navigate, in particular for smaller business. Taxation is a matter of national policy. I think that we will hear a lot today, and we know that, but still it is extremely relevant for EU policy in different ways. First, this tax expenditure comes under scrutiny in the framework of the fiscal surveillance that we are undertaking on a yearly basis. Second, they very often constitute state aid and are as such subject to state aid control. Third, their streamlining is very often recommended by the Commission, by the Council in the context of the European semester, and led to quite a number of substantial reforms in the framework of the implementation of the Recovery and Resilience Facility. And then finally, sometimes they are one means of implementing EU spending through tax expenditures provided by national government. So to dive into all of these issues, all of these challenges and trade-offs, we have the privilege to have with us today 4 distinguished speakers, starting with Ludovic Odor, member of the European Parliament and member of the subcommittee on tax matters. Next to him, we have Sophia Berg, fellow at the Council on Economic Policies, and next to her, Annette Alstadsteder. Is that okay? Professor and founding director of Cederforsk, the Norwegian Center for Tax Research. And finally, Peter Hazekamp, president of the Dutch Bureau for Economic Policy Analysis and chair of the European Fiscal Board. So many thanks to the 4 of you for being with us this afternoon. I'll start with a few questions to the 4 of you, and then we'll give the floor to the audience and to all those following us online through Slido to ask any question that you would want to have answered by all 4 speakers. So let me start with you, Ludovic. Tax expenditure are used to pursue a variety of policy goals. Could you give us some examples of areas where they've been very effective, but also areas where they have simply created distortion and being ineffective?
Thank you and good afternoon to everyone. I never expected that tax expenditures can attract so many viewers, but it's a fascinating topic. Actually, we introduced into our constitutional law on budgetary responsibility the requirement to disseminate data on tax expenditures. And also, and it was not mentioned at the beginning, but it is very important that sometimes if expenditure rules are very strict, then people start to come up with good ideas how to introduce tax expenditures, because that is not under the expenditure rule. And to your question, actually, I think there are I would say two big categories of reasons why to introduce tax expenditures. One is mostly okay, or at least I think that we can design those in a way that can be effective. And those are the tax expenditures which incentivize people and businesses to do something which can be viewed as a kind of sometimes even as a public good. Maybe that's too much of asking, but at least something which is helping us in the transition we are living in, like the green transition, digital transition, or for example, saving for old age. If we incentivize people and businesses to do this, it might make sense. But of course, with a strict evaluation at the end. What I don't like too much is when tax expenditures are justified based on redistribution. Because, redistribution is a very, very complicated and politically charged topic, and we cannot judge the whole budgetary system based on the redistribution effect of just one tax, or even taxes as a whole. We need to take into account also the expenditure side of the budget in order to understand the redistribution effects of fiscal policy. So from that perspective, in many cases, it is really suboptimal or not very efficient to introduce tax expenditures like reduced rate VAT, because it helps also a lot in money terms the more affluent households and not just the people at the bottom of the income distribution. So as a starter, I just wanted to highlight these two aspects where I have a very different evaluation of tax expenditures.
Thanks a lot. Moving to Annette now. How can we effectively identify and quantify the impact of tax expenditures? So Ludovic has already told us there's some he likes and some he doesn't like, but how can we define them actually? And what is the benchmark? Is the benchmark a neutral element, or is that something already politically charged?
Okay, that's several big questions that will take hours to answer. But the main question is, what is a tax expenditure? What do we classify them as, and how can we measure them? And the answer is that varies across countries, it varies across time, and it's also quantification. We're missing data. We don't do this as a systematic manner. So and also the definition varies in different countries. Some countries have don't even have tax, for instance, interest rate deduction. Some give full interest rate deduction for all individuals, for everything. Some call it a tax expenditure, some don't. And how are we even going to compare this across countries when we don't have a coherent definition? And if we don't even do this as a systematic manner in quantifying them. Okay, we have that in many countries report this on the national budget and stuff, but it's just hidden in a table somewhere and not evaluated and not discussed. And I think this is something we should think a bit more about. Is maybe even a democratic problem, because we do tend to discuss a lot about all minor, small spendings on the budget, but we never discuss all these spendings that goes in secret, basically, through these tax expenditures. And if they are first there, they're sticky. They don't get away because they become kind of a human right for individuals. So it's very difficult to get away. So I think first we should have a coherent definition, and that's where the Commission could help us implement. And then also have a framework for evaluating that and what to compare with, because what is the cost of the tax expenditure as well? Are we sure that they would have been paid if they hadn't been there? So what's the baseline you compare with? So as a boring academic, I would say it all depends. And we need more data and more research.
Thanks a lot. But if I can follow up, would you see scope for harmonizing that benchmarking? Still to you, Annette. Among member states, I mean.
So I'm from Norway, so we are not. I don't have a right to say what you should be doing in the member states, but I do see EU and the Commission as having a tool, like having some authority to implement this basically recording and evaluating and benchmarking it. So having a methodology to do this in the same way across countries and having more attention to this huge spending. Like, we spend so much money every year. Nobody lifts an eyebrow about that, and nobody has an idea what the distributional impacts or whether it actually contributes to the goal that were like made out when we introduced this tax expenditure different measures. I feel, again, this is just an impression, but I'm doing a lot of research on taxes and on tax rules. There's very little research on, as I've seen, on tax expenditure. We don't discuss it. And it appears to be more like a struggle of narratives. If you make a good narrative, a good justification for introducing a tax expenditure, there's no accountability to see whether it actually has that effect or whether it should be removed. So, and I don't think that tax rules or spending should be a matter of who has the best narrative or who has the best lobby interests in order to get something through. That should be a matter for politicians to make these trade-offs.
Thanks a lot. Peter, I think one way of where we are looking at it from the EU is, of course, fiscal surveillance. How do you see them dealt with within the new economic governance framework? Are there any particular challenges with tax expenditure in that framework, and how could we go about it?
Yes, thanks, and good afternoon, everybody. So the new EU fiscal framework, I think, in a way, gives some tools to do exactly what was discussed, namely to harmonize reporting, at least on tax expenditures, because the new framework, as you probably are aware, is based mainly on one single indicator, namely net expenditure growth, and that of course consists on expenditure, classic expenditure on the one hand, but also on discrete revenue measures on the other side. And part of these revenue measures, of course, are tax expenditures. And actually, we've been reporting now on the first year of the implementation of the framework. And what we see is that there's already debate on what exactly is a discrete revenue measure and how do you measure the fiscal impact of that, because tax expenditures and all discrete revenue measures tend to be open-ended. They have behavioral effect, so it's even harder than for expenditures which are in the budget. It is harder to predict exactly what their fiscal cost is going to be, and it's also harder to monitor exactly how that develops in time. And I would argue that it's important to have harmonization there, could also be part of the code of conduct that we have concerning this fiscal governance framework, but that we should be in agreement on how to measure these things and also how to monitor them over time.
Thanks a lot. Turning now to you, Sophia. Ludovic already mentioned the choice made by some member states to use tax expenditure for redistributional purposes, and already mentioned his opposition to that. But how do you see this? And would you also, picking up on what Annette was describing, see a possibility to develop a better evaluation framework to bring some more transparency and accountability on the use of tax expenditure and their redistributional effect? It's many questions in one.
Yes, of course. I will try to structure my thoughts around this, maybe starting with or reverting to the benchmark question. So tax expenditures are defined as the deviation from the benchmark. The benchmark is the normal tax system, and that is a political decision. It can be very difficult to harmonize because it's up to the national government to define what their national normal tax system is. But what we can do is maybe harmonize how we report on it, require more transparency about what the benchmark is, because it then in turn defines what we define as tax expenditures and what we then estimate and then evaluate. And as you said, tax expenditures can be very regressive and have a very the distributional impact can tend to benefit people who are more well off. Say reduced VAT rates, for example. They benefit people who consume more, but the aim very often is to benefit people on the lower income side. So as a share of income, they can benefit them more, but in absolute values, they tend to benefit people who consume more. And that can be very important to show, and you show that by providing distributional analysis. And that is a sort of assessment or evaluation. It's a fairly low-hanging fruit for ministries of finance to engage with. A few countries include these distributional analysis or assessments in their annual tax expenditure reports. Australia, for example, does that for their 10 largest tax expenditures. And then they show a distribution by gender, income decile, sector, and that provide a lot of very valuable information. So that's one part of the assessments. Evaluations tend to go even further. We usually refer to it as cost-benefit analysis or impact assessments, and they go beyond. We want to see if the tax expenditure or the tax policy measure achieves the policy objective it was set out to work towards. Then we need to have a well-defined policy objective, of course, with clearly and well-defined performance indicators. We also want to see if there are any externalities triggered by this tax expenditure, and then also see if the fiscal cost, because they come at a fiscal cost, we choose to forgo revenue because we introduced these tax measures. And we want to see if the cost of this is justified with the benefits we see it triggering. And tax expenditure evaluations are strikingly rare across the world and across the European Union. Only a few tax expenditures are evaluated, even fewer are evaluated in a systematic way. So having an evaluation framework in place can ensure that these tax measures are assessed on a continuous basis, not annually. That would not be feasible. Some countries have 600 tax expenditure measures in place, even more. So it's not feasible to evaluate them every year. But within an evaluation framework, you can set out a cycle, maybe 5 to 7 years, because we also want to ensure certainty of the tax measures we have promised the public. We can also have sunset clauses of tax expenditure provisions. So when the tax expenditure nears its sunset, then we also want to assess whether it has been close to achieving what we wanted it to achieve. So in a way, the evaluation framework should span to both ex-ante assessment before we introduce the tax measures. So we set out these performance indicators, see if we have sufficient data collection in place, what type of data do we need, who do we want to benefit. So we then ex post after some time can see if we indeed have benefited the people we want to benefit, at what cost, and so on. And there's many different ways of setting up such a framework. Maybe you can prioritize to put a stronger emphasis on evaluating the more costly provisions, so you have a staggered approach, more and heavy focus on the larger one, or a risk-based assessment where you assess the cost, and if the cost exponentially rise sharply, during a few years, then you prioritize those for evaluation. But there's many ways of setting in such an evaluation framework up, but I can highly recommend countries to introduce it.
Thanks a lot. And just as a follow-up, would you see scope for doing that in a kind of harmonized manner across the different taxation systems? Because they are inherently different. But would there be a possibility to create an evaluation framework that would also allow comparability?
So I think evaluations need to be adjusted for the provision that it evaluates, right? But for example, within the Union, you have 2 countries who have a well-defined tax expenditure framework. Both Ireland and the Netherlands have explicit evaluation frameworks in place that are guided by a few set predefined questions, both predefined ex-ante questions and ex-post questions. Maybe working with these questions could be one way of harmonize an evaluation framework approach within the Union. So you agree on what the evaluations should focus on, while you also allow for some sort of flexibility when you want to evaluate a certain provision or a group of provision. Yeah.
Thanks a lot. And assuming that we manage to have such a deep and fact-based evaluation, then we will face the eternal question on how to convince policymakers to act upon it. So turning back to you, Ludovic, based on your experience, how could we convince politicians to take action when the evaluation of a tax expenditure reveals that it's just ineffective or that its cost-benefit analysis is clearly negative?
It's not so easy, but that's not very helpful. So I think the first step is to have the transparency, the data, and the analysis. And one thing which can help in a lot of countries, they are regularly doing spending reviews on the expenditure side of the budget, and they should include in those spending reviews the relevant tax expenditures, in order to compare the effects on the 2 sides of the budget. And that's a kind of a minimum thing at the analytical level. My experience is that also, at least in my country, I see a clear cyclicality in tax expenditures, because if there are hard times, from a political perspective, at least again in my country, it is easier to abolish tax expenditures than take away real money from the expenditure side. Because the argument goes that actually you are getting some extra benefit from a tax side. So from that perspective, at least politically, it was easier to abolish a lot of, we went through, I guess, 2 cycles of abolishing a lot of tax expenditures. So from that perspective, I'm not a big cheese expert, but I used to say that the tax system should not be as a Swiss cheese, but more as a Dutch cheese, where it's less holes inside. Whatever. Two issues I wanted to comment on the distribution side and on the harmonization side. On the distributional aspects, I think that technology can help us at the end, because now we have a lot of tax expenditures in the VAT, especially because the politicians feel that we need to help the poor. But actually with technology, it is at least technically possible to have a kind of a progressive VAT system based on data available when you purchase something. Actually, it's quite easy to do that if someone wants to have that kind of tax expenditures. And it is more tailor-made, more targeted, and actually it can be part of the system, like it is part of the personal income tax, where you have a kind of a progressivity. You can do the same in the VAT with the technology. That is just one comment. My second comment is on the harmonization, what to harmonize in the EU. I think it is quite hard to harmonize definitions and best practices, because in many countries we have very different views what is a benchmark, what the benchmark tax system is. And you know, is it a normative aspect, a positive aspect? So should we go and calculate some kind of optimal policies and compare to that, or just to look at the historical records? Because in history, maybe in some countries there were a lot of tax expenditures, so it's not entirely clear. But when I see a clear reason for harmonization and looking at the problem is harmful tax competition and the tax and the state aid issues, because you know that is not just a country's perspective, that is a perspective of the European Union, and therefore I'm a bit more you know, willing to see or willing to analyze those aspects than to have a one-size-fits-all definition for tax expenditures in the EU.
Thanks a lot. I see that Annette wants to react.
Yeah, just building on what you said there is really interesting about this competition, because getting back to the benchmark, we usually think like tax rules and tax policy is national. And when we benchmark the tax expenditures, we see what would we have in the national tax system if we hadn't had them. But if you look at this growing concern about harmful tax competition in the EU with green subsidies, or we don't call it subsidies, it's kind of incentives, but also we see I wrote a global tax evasion report together with the EU Tax Observatory a couple of years ago, where we looked at this, and there seems to be an increasing tax competition for wealthy or like high-income individuals. You compete with the others of the tax base, so you have special tax regimes for sportsmen or for like tech experts or wealthy people in Switzerland, all of that. But when we nationally would see the cost of that, having such a preferential tax regime for high-income pensioners to get them to tax here, we are basically cheating other countries for that tax revenue. They're coming here. But when we evaluate the cost of such a tax expenditure, it's just what that income would have cost here in our country. But it actually is a net benefit for this country. So we don't take into account the damages caused in other countries. And that's kind of a problem when you look at all these investment incentives and green provisions that is there to attract investments to other countries or to attract high taxpayers to our country. But what's the consequence for the other European neighbors? And we estimate this cost just for the individual level, tax competition, these special regimes for pensioners, to 7.5 billion euros. Lost tax revenue had it been taxed at full revenue, like full rate in this country, but you don't take into account what it costs. So huge money, and we don't even talk about it, we don't evaluate it, and we don't see, like, cheat thy neighbors, basically.
Thank you. But how to distinguish then what is just genuine tax incentives that you want? You mentioned greening before. I think that you want to promote green investments or decarbonization of certain processes. So you have tax incentives that are legitimate on their motives. So what do you how do you distinguish this from unfair tax competition?
They're legitimate for the country doing it, but the aim is to attract more investments. So it's not illegitimate that the cost is, if you're evaluating it as a tax expenditure, what's the tax base or like the baseline you're comparing it with?
Sure, but they're not necessarily in competition with one member state against the other. Are they not all driving to the same outcome, which is, for example, to attract more green investments? And don't we have tools, or that's more a question, are the existing tools such as state aid control not sufficient to ensure that that this is not unfair tax competition?
That is an empirical question. We don't know. It's all a narrative. We don't know. We don't have the numbers to see where the investment is coming from. Like have data across countries. We have national data because data are made, like how is data made? How is statistics made? They're made usually through tax reporting, which are national. We think that data and statistics are neutral and give a big picture. They are made, often collected for other purposes. and for tax purposes in that country means that they are reflecting the tax system of that country. And it's then difficult to see, like, if you have a new company coming in, you have no idea where it comes from. If you have, so they just pop into your statistics because you can't see it like across countries. So that gives us a very, we can evaluate, we can assume, but we don't know much about where that is coming from and what are the actual effects of the incentives we're doing.
Indeed. Peter, how could, and Sophia, I'll get back to you immediately thereafter, how could we fix that?
Well, that's not an easy question. So I would argue that indeed state aid provisions are not enough to prevent this kind of harmful tax competition. In the past, so this debate has been going on for quite a long time, but in the past the attention has been mostly towards corporate profit taxation, and there some steps, of course, have been taken to prevent the worst kind of practices, including some that were coming from my country. But the problem is, of course, much broader. So, as you say, it's also high-income individuals, expat allowances in the fiscal in the tax system. It is also on fossil fuel subsidies, so high energy use firms often pay less or get a complete exemption for energy taxes. So this of course leads to a kind of race to the bottom, so the argument of course for tax expenditures can be that it's a way to generate positive external effects, but these are clear examples of generating negative external effects, both on other countries, but also within the country itself. And I mean, the fossil fuel subsidies are a case in point, I would say. So what can you do to fix this? It helps, as has already been argued, to be transparent, to report on this, and peer pressure, even though it's a weak instrument, it helps in some way. It has helped in the discussion on corporate taxes and some of the things we've seen there. It may also help to for example, to have obligatory evaluations in some kind of fixed form, or at least fixed procedural form within the EU. So again, the ultimate way of enforcing that would be peer pressure, but still it would clearly help if it can be shown that a certain tax measure or a tax expenditure basically is just beggar thy neighbor. I mean, that clearly helps. At the same time, so as long as taxation is a national responsibility, it will be hard to go further. So it will be, we have to rely in this stage on things like peer pressure, on transparency, on reporting and monitoring, and hope that will have some effect.
Thank you. Sophia, you wanted to jump in.
Yes, I can pick up on what Peter said about reporting and transparency, because I think that's key. So state aid covers tax incentives that are directed to companies, but as both Annette and Peter mentioned, it can also be directed, tax incentives directed to expats or high-skilled laborers, wealthy individuals. And these measures could be in a transparent way reported in tax expenditure reports. And so tax expenditure reports is a document where you try to depict the entire landscape of tax expenditure policies in a country and show the cost of these measures, policy objectives ideally, maybe even how many beneficiaries there are per provision. And in the EU, tax expenditure reporting is very scattered. We have a few countries that are doing a very good job showing a lot of information, a lot of data, and then we have other countries who's not doing an equally good job. They are not even reporting on an annual basis or have stopped reporting at all. The EU has a directive in place that says that countries should report on tax expenditure, but it stops there. It could be extended to include some minimum criteria of the information that is included in tax expenditure reports. just because, as you say, we want to know how countries compete with each other. And if we don't have any information, what do we know? So starting with the tax expenditure reports, I would say, is a very good starting place for the EU.
Maybe just one comment. So when it was a problem of negative spillovers in fiscal policy, the EU defined the Stability and Growth Pact, at least a kind of a benchmarks which at that time seemed to be, that beyond that there are gross policy errors, and if there is a race to the bottom, we need to define the bottom, because otherwise it can be a problem. So by step looking at different and starting mainly with the indirect taxation when there is an EU responsibility there. So to define some areas what can be judged as a harmful tax competition or beggar than neighbor policy. So from that perspective, it is very arbitrary because we cannot say that up until that point it's just the country's interest, and if they go over, but at least to have a kind of an understanding that Europe will never succeed if we will compete against each other and not against, for example, China or the United States, and that is how we should go forward.
Would you see this as promising? I see both of you, Annette and Peter, nodding.
Yeah, I think you can make a convincing case, as Ludovic is saying, that this is harming Europe as a whole. And maybe so in my previous job I was Director General of Tax and Customs Policy in the Netherlands. So maybe I'm also kind of optimistic that it is possible to convince policymakers that that they should stop or at least limit tax expenditures by showing them the other side of it. So of course this comes at the cost. It comes at an economic cost. It comes at a budgetary cost, and especially in times of these where there's a clear need for, on the one hand, growth enhancing public expenditure, and on the other hand, debt reduction in a lot of European countries as to make public finances sustainable. You can show the other side of the tax expenditures, not just to fill gaps in the budget, but also to, for example, if you cut the exemptions in the VAT, that it's possible to lower the top rate and therefore make it more attractive for policymakers to also have the positive side of reducing tax expenditures.
Thank you, Annette.
Yes, I agree with that, and I think to build on what's been said here, transparency is key, also to get it into proper parliamentary processes, to have okay, can have tax expenditures, but it should be a decision, not just a historical fact. And I think also what you're saying about evaluation and maybe distributional concern, that is kind of something I see also when we talk about taxes. We talk about either the inheritance tax or the corporate tax or the inheritance tax, but taxes don't work in isolation. They work in combination. And then that's what we discussed here at the previous panel, the layers of well-intended reporting requirements can be too much. You have to see all of them together, and the same is with taxes. What is the effect of a tax, and who benefits? What's the effect of all these? We said 60 tax expenditures. If you have so many, what's the interaction? Is it so that some actually they benefit some all the time? We can't evaluate one of them, and what's the distributional effect if you see that in comparison, and the total distributional effect of what you have on individuals and firms. And firms are not. They're not, we talk about the firms and the big firms as if they're independent individuals. They are for the tax law, which I think they shouldn't, this legal requirements of each firm being a legal subject is also very harmful to getting the correct taxes and all this information flow, because it's a kind of efficient stopper of information when you have each firm a separate legal person. But that also comes to like who firms and corporations are tools to run economic activity. But they're run and owned by individuals. And who are the individuals then who benefit from the tax expenditures we give to firms? And like if you see that in interaction, like is it the same individuals, like owners, who benefit from all these tax expenditures? Then this has a totally different distributional profile than if you just see them at once. And there's so little analysis on this. Like it's kind of an empirical question, and we don't talk about that at all. Should be much more research and much more awareness about this, but we are lacking data, and that's where you can help us get them.
Thank you. I think that's going to be the last one on the recommendation for us. But before we get there, questions from the audience. There's already quite a lot of food for thought. Please don't be shy. Yes, I have a question here on the right side. I think we have a mic somewhere.
My name's Daniel Butt. I'm with Tax Foundation. I also run. Thank you. My name's Daniel Butt. I'm from the U.S. I run Tax Foundation, also Tax Foundation Europe. In the U.S., the way our fiscal authorities deal with this is by starting with very close to theoretically pure income tax definition. And then looking at deviations from that. You could also start from a theoretically pure consumption tax position and look at deviations from that. But I'm curious why a sort of theoretical underpinning has not been kind of the theme for defining tax expenditures so far. Because certainly the distribution questions are very difficult and there's a lot of empirical challenges there. But just on defining the magnitude of the tax expenditures, it seems that there's just a total absence of a consistent theoretical underpinning, and I'm curious why that might be, or what ways what opportunities there might be to look at a kind of baseline definition. Haig-Simon's definition is what's used in the U.S. Thanks.
Thanks a lot. Who wants to take this one? Peter? No.
Right, it's a difficult question, and I think in some countries it works this way. So I mean, for VAT or income tax, you can on a national basis have structure the debate in this way, that you can say, okay, what is the system that will be theoretically optimal? Then of course we have to look at how the whole system works, and you always have a legacy in the tax system, and then you can for political reasons or for certain policy aims, you can create exemptions to the system or make allowances for certain policy aims. I think one of the problems is that we, maybe with the exception of the VAT, that we haven't had this debate on a European level, that because national systems are so difficult or so different, you start basically by looking at the differences and how we can bridge them, but and that is a very, very difficult task. But we, at least I'm not aware of the policy debate in Europe being structured this way, and I think it is because of the huge differences in national tax systems, maybe with the exception of the VAT.
Thanks, Ludovic.
I just wanted to add that when we first published this extensive list of tax expenditures, actually our benchmark was a kind of a theoretically optimal tax policy, like a kind of a consumption tax. So it can be done, but I'm very skeptical that this is something which can be agreed at the European level.
Sophia, you also want to come in?
Yeah, so one reason why, maybe returning to the benchmark question, why they differ is because it's also based on a normative principle. What do we want the tax system to do, and what is normal? So, for example, if we take VAT reduced rate for foodstuff, that is treated very differently across the Union. Some countries consider that part of the benchmark because the normative idea is that you're not supposed to tax food, while others see it as an expenditure. We provide the support to our taxpayers, so we see it as an expenditure going through the tax system. So I think that's why it becomes a bit difficult when it comes to the benchmark tax system, because it also involves the normative idea of what the national tax system should do and should be, to some extent.
Thank you, Sophia. So I have two questions here on the left side. Benjamin on the first row.
Thank you, Benjamin from the Commission. I have a question for Peter, but also the other panelists. The Netherlands stand out indeed as being one of the only countries in the European Union with a systematic evaluation and measuring of tax expenditure, which leads also to the situation where, in our numbers, the Netherlands are by far the number one, and for the value of the tax expenditure, annually it's 15% of GDP annually, so it's huge. But my question is, you do those regular assessments, but somehow you bump into the same problem as almost everyone else, which is moving from the assessment that the tax expenditure is not delivering to effectively terminating it. So how can we make the whole process more actionable? One of you mentioned sunset clauses. Is this an avenue, or are there other possibilities?
Yeah, thanks. And of course, I recognize the point. I think there have been some successes, like on the low VAT rate, which has been put at a higher level in the Netherlands. Some specific assumptions or tax expenditures for things like schooling were replaced by subsidies. But you're also right. I think on the big ones, for example, housing it really stands out, which is also very which really profits the higher incomes, and therefore is extra harmful, I would say. For political reasons, we haven't yet. Well, we have taken some steps, but it's really hard to really get rid of these things completely, and they are, as you said, at a high level in terms of missed revenue. So I think the only way is to keep trying and to keep making the argument. So we have a new government in the Netherlands since 3 weeks. They are already running into problems with some of their cuts in health expenditure and social spending, and then it's natural, and I certainly am advising them to look at alternatives, for example, in tax expenditures, and even though it's not an easy path to go, if the alternative is clear and is also difficult, then at some point my faith in the political system is that they will do the right thing in the end, after they've tried everything else.
Anyone else wants to react? Annette?
I totally agree, and I'm frustrated about the lack of action. But I think it also is accountability for the politicians and bringing it on the political agenda. And there again, back to my boring thing, transparency and data. We need data, because if you have the facts, you can put it on the political agenda. If you have like a one-liner with a number, you can get a headline and you can make the politicians talk about it. Like, tax expenditures aren't very sexy. You don't win any voters with them. You basically just lose voters because you take away privileges. So if it's not on the agenda, why rock the boat? Is my simple, so hopeful with more data, and that's why I'm looking at you and you to fix it.
We took note.
Maybe also quickly, because you mentioned sunset clauses. So they are actually maybe an efficient tool to bring the tax expenditures up to debate and up to evaluation. And then one other important factor is communication. So communication of the evaluation results, both to policymakers but also to the public. So because people are strikingly not aware of tax expenditures or tax cuts, because the public's perception is that tax cuts are good and that's all. They don't see it as spending or something that is beneficial for a short period of time. So we need to communicate that adequately. But when we want to reform something, it's also about timing, because we have seen tax expenditures that have been negatively formed, and then we have tried to reform them, seen huge backlash because people are benefiting from them, and the timing has been off. Let's say you want to remove a fossil fuel subsidy, but just before you introduce the carbon tax that increased the price. So then you increase the price and then remove a tax benefit that also would, again, increase the price. We need to have some holistic approach to policy making and also think about the timing. And just because the evaluation instantly doesn't trigger reform, maybe we'll do so later because we at least have the information available at hand. So even though we don't do it today, maybe someone will look at it tomorrow and then we do it tomorrow.
Thank you. Another question on the left side, just behind Benjamin.
Thank you. Thank you, and thanks for the wonderful conversation. My name is Miguel. I'm a member of Parliament from Portugal, and you'll be glad to know that we've just finished our first assessment of tax expenditures. And you'll also be happy to know that we've started a parliamentary working group in order to actually evaluate it and take some decisions on them. And we've discussed a lot about how they can be bad, but actually the results are that they are good. Our R&D and our investment tax credit generated for each euro we've spent in tax expenditure 1.8 euros in investment. But the issue is, take-up is of course not as great as it could be. So I guess my question for the panel is, how can we compare and improve across countries take-up and the effectiveness, the multiplier effect of these tax expenditures? Because we all have tax expenditures, we want to make them better. And of course something that's been discussed is maybe transferability or the refundability of the tax expenditures. Like we have the earned income tax credit in the US, maybe that can make them distributionally better. I don't know, those are just some clues of how maybe having more information can allow us to improve take-up and multipliers. Thanks.
Thanks a lot. Any reaction? Peter.
Yeah, well, I think here transparency and data is part of the answer at least. So you should have empirical studies which look at which tax expenditures are effective and whether they have significant multipliers, but also those that haven't. So if you look in the Netherlands, for example, at R&D, we have two types of tax expenditure there. One is really directed towards the research activity itself, basically cutting wage costs for startups and firms investing in R&D, since they often do not make a profit yet. And that really works. It has a high multiplier, which is also shown by international literature, etc. The other one is the innovation box, which is really a lower profit tax for firms which have already innovated and are basically exploiting this innovation. That is, I think, one of those measures that helps in attracting businesses to the Netherlands, but at the cost of other countries, and it doesn't in itself really provide a real incentive for higher R&D spending.
Annette?
Yeah, I think it's great that you put it on the agenda and that you're evaluating. Again, with the doubtful, be aware of the conclusions before we know what's kind of in the data and the evaluations. Because what you said about the R&D expenditure and like the patent box, we know that the patent boxes don't necessarily create more innovation. They are just tax competition, like relocating. So does it actually help Europe as a whole? So where does the increased spending come from? We also know that I've been partaking for the Commission, okay, I don't want to count how many years ago, an evaluation of the R&D expenditure, like tax credits. And what is reported is not always the accurate one, because it's difficult to, and what we see often that there can be like relocating wage costs from one ordinary wage cost under this incentive. So the incentive for cost shifting and renaming and stuff. So there's, Okay, that's an unfair argument to say we cannot trust anything, but I think we should be aware of these incentives we create when we make these measures, and that the evaluation also should take into account, like, where is the money coming from? Is this all new investments, or is this all good? Or what's kind of the trade-off and the cost of the other end? But yeah, sorry, I was starting out as saying great that you evaluate it, and then the researcher comes with the doubt, like, can we trust the data? Sorry.
Thanks a lot. Last question before the concluding remarks of the members of the panel. Last chance. Yes, here on the front row.
Thank you. My name is Max Veldhoven with EY. Just a question that I have, and maybe I missed it completely, but last year the new state aid framework came out, and also a set of recommendations on tax incentives by the Commission. Basically this call for further transparency on tax expenditures and the cost thereof, has that been considered at all or enough as part of these initiatives? Because I would think that that would have been an opportunity, but I'm not aware of that. Just enlighten me, has that been discussed? Is it part of it? What are your thoughts?
Yeah, it's a bit more. Yeah, there is somebody from the Commission. Benjamin, you have the. I'm also from the Commission, but not the right. Not the right part of it.
Okay, here's that. You want to have?
Yeah, it's one of the priority of Commissioner Hoekstra, actually, which is our commissioner. We have started for the first time last year to issue a report called Mind the Gap, which follows both the tax compliance but also the tax expenditure. And this year, the intention is to make it a college document, so we have to have discussion in the ECOFIN Council, so as to bring more attention from the political level on this issue of tax expenditure, for the reason you have all explained very eloquently, because everyone focuses on reducing the tax gap, reducing the CAT gap, and tends not to pay attention at all on the tacit huge loss of income, which comes from the decision which were made year after year and not revisited. So it is a priority, and we will pay more attention in the future than we have done in the past.
Thanks a lot. So that's the answer. Before we conclude and bring an end to this panel, so you've made already a lot of recommendations, or at least two very clear recommendations to the Commission. But if you could have one recommendation to the Member States and one to the Commission, what would it be? I'll start with you, Ludovic. And we're taking note.
Yes. Okay, so let's start from a very different angle, but it relates to the tax expenditures. That actually, if we have a very diverse set of tax expenditures in Europe, it also creates fragmentation, and it also prevents scaling up of innovative companies, because they are, they are not able to pay the money to understand 27 different tax regimes, and therefore now we have discussions about the 28 regime, and maybe through that we can achieve, at least for some part of the companies, something which has a more European appeal and less national appeal. So that is for the Commission. On the for the member states, I would say the most important thing is that they should compare, or at least what I already mentioned before, that when they do the spending reviews on some topic, on some issue, they should also include the tax expenditure part, because the best thing is to evaluate the same with the same point of view, not only the expenditure items on the expenditure side of the budget, but also the tax expenditure. So that would help at least to create a conversation about the rationale of the tax expenditures.
Thanks a lot. Sophia.
Yes, so I'll try to keep it short and revert to previous points made. So for the Commission, I would again re-emphasize the directive governing tax expenditure reporting, and revisit it and see if there's scope to include stronger requirements on the content of these tax expenditure reports, because as I mentioned, a lot starts there. It's a great source of information. Maybe even consider gathering EU member states and discuss with the peer-to-peer learning focus how we together can discuss tax expenditure reporting, what can we learn from each other, how can we improve, what are you doing, what are we doing. That would be one way to go. For member states, I would strongly recommend sitting down and start to think about how do we want our evaluation framework to look like? What is feasible for us? Can we do it in-house? Do we want to outsource it to external institutions, research institutions? What is the process of doing so? Data sharing protocols, and also look at what data do we have at the moment, what data do we need, and how can we improve this? Yeah.
Thank you. Annette.
Yeah, building on what Danielle said here, you are putting it on the agenda, which I think is really important. Get it in the forefront in the discussions. This is kind of a spending decision that's made like unconscious and like it's not even made. So I think getting that out, and also I think building on what we said, harmonize the reporting, but also the data requirements needing, like give guidelines on which data to collect and do it in a uniform manner, so that this can be like more easily streamlined across countries, and also to see, okay, that's more than one, to see like, because you are in the position to see things across countries, not just do a country level evaluation, because kind of what is the Europe-wide consequences of this kind of play with the numbers that we do and beggar thy neighbor, which this is a lot of, right? And for countries, I would say, get the numbers right, do proper evaluation and stop letting the lobbyists and the narratives govern your spending. Like, it's an empirical question to see what's spent and what are the actual effects of this. Do they fulfill it? And get it on the agenda and do the analysis there.
Thank you. And finally,
yeah,
Peter.
for the EU, I can support with what has already been said. So standardized reporting, that will help a lot, I think. And so getting the data out there to be transparent. And for member states, well, if I look at my own, so we have the transparency, I guess, but now it's a question of basically acting on that. And maybe one point which hasn't been mentioned a lot yet in this debate is the cost of complexity. So and that's something that I think you could also use as an argument to convince the general public. So it's clear that there are special interests, and they always be against stopping or diminishing these fiscal advantages, this tax expenditures. But I think you could make an argument to the general public that this also makes the system as a whole too complex, that normal citizens, but also firms, do not know their way around the system. They need special tax advisors to help them. Complexity is also something which basically increases inequality by itself. So I think that is something an argument you can make to the general public.
Many thanks. We took very good note, and we'll follow up. Many thanks, and let me join me please in a big round of applause for our panelists.
Indeed. Thank you for leading this panel. Thank you to all panelists for being here with us today. Talking of which, being with us today, unfortunately, I have to announce that Commissioner Dombrovskis was taken ill today, so he will not be able to join us for the fireside chat. We wish him, of course, all well and hope that he will be joining us on another occasion, whether it's this year or next year, because as I said this morning, they've started a tradition with the Tax Symposium, so I'm sure there will be plenty of other occasions. For me, there's nothing left but to round up this very first half day, to ask you all, upon leaving this room, not to forget any of your belongings, to take out all your coats, because it's cold outside. They are going to close the building in half an hour, so if you, by the time you reach the metro, you notice that you haven't got what you need, you might want to come back tomorrow, but it will be closed. And then there's one final thing that they just announced me, which is actually a funny thing. Unfortunately for the people back home, you will not be able to join in with this part, because they've just told me that The green plants that you see, not the big ones, the small ones, so I imagine that that's a small one, that would definitely be a big one. This is like in between, depending on how tall you are. If Commissioner Hoekstra would be next to it, he would say this is a small plant, but it depends. You can actually take them home. So you're free to take one here, take one over there. If it's a green fun gift from DG Taxud to all participants. The big ones not, because they're rented, and we were just talking about tax expenditures, so we don't want to waste taxpayers' money. They were rented, so those have to go back. So unfortunately, even if you're able to carry a big one, that's a no-go. Thank you once more to the panel, and see you all tomorrow in the European Parliament. So do not show up at Autoworld, please. You might be able to walk around, see the beautiful cars, but you will not be able to hear the rest of the wonderful discussions. Thank you also back home for having stayed with us throughout the afternoon. See you all and have a great evening. Bye.